So our next panelist will be discussing how to collaborate on a stable financial system in an era of rapid technological change. This panel will be moderated by Gaston Gelos, the deputy head of the BIS's Monetary and Economic Department and head of financial stability policy. And Gaston will be joined by three panelists, Aino Bunge, the deputy governor of the Sveriges Riksbank, José Luís Calderón, the CEO of PagoNxt, and Andrew McCormack, the CEO of Nexus Global Payments. Many thanks to you all for participating, and with that, I'll now invite you, Gaston, to come up to the stage with your panelists for the panel. Thank you.
So, welcome everyone to this session on collaborating for a stable financial system in an era of rapid technological change. As new and emerging technologies such as AI and quantum computing are, or at least will be likely affecting the financial sector increasingly, the implications transcend borders. And we have already heard about some of these dimensions in the previous discussions. And this not only implies a greater need or greater urgency for collaboration, it also creates challenges in the sense that new forms of collaboration in new areas are needed. For example, when it comes to the issue of data in the context of AI. So we want to discuss the importance of cross-border cooperation among central banks, regulators, and financial institutions to effectively address these common challenges. And it's my pleasure to welcome the three distinguished panelists that were just already announced. Let me say a few words about them. Aino Bunge is Deputy Governor at the Central Bank of Sweden. Previously, she was Vice President and Head of Staff at AMF, not IMF, I came from the IMF, AMF Pensions, and served as Director General for Financial Markets at the Ministry of Finance and Executive Director for Markets, Economic Analysis and Policy at the Swedish Financial Supervisory Agency. Andrew McCormack is the inaugural Chief Executive Officer of Nexus Global Payments, a non-profit organization established by central banks. And before joining NGP, Andrew was CEO of Etihad Payments, the national payments entity of the United Arab Emirates. He was previously the founding center head of the BIS Innovation Hub in Singapore, and before that, Chief Information Officer at Payments Canada. José Luís Calderón is CEO of PagoNxt Payments, part of PagoNxt, the business by Banco Santander that brings together its payment solutions. Prior to his current role, José Luís was Managing Director, Global Head of Global Transaction Banking at Santander Corporate and Investment Banking. So let me start with a question to you, Aino. Given your experience in both Swedish and international financial policy, how do you see the integration of advanced technologies transforming the risk landscape for central banks? What, in your view, are the most urgent priorities for regulators to ensure that both innovation and financial stability, are maintained as these technologies become more embedded in the financial system? And how can cross-border cooperation help balance these two things? On the one hand, promoting innovation, but on the other hand, managing the potential risks as well.
Well, thank you so much, and thank you for inviting me to talk about this topic. I think we'll come back during these days to this balance between having a safe environment and maintaining our mandates, but also getting the kind of innovation that we need to actually control the risks that we see in a rapidly changing environment. And I was at the conference last week at the European Systemic Risk Board, and Professor Ian Goldin then told us that this will be the slowest day for the rest of your life. And since I had a really busy day then, it felt a little bit discouraging, but it's really true that this type of change is going to continue, and it will move faster, and we need to move with that change. And central banks need to be part of the development, and not just bystanders that are trying to control the risk. So I think that's a really important message that we got from the last panel, and that I would like to emphasize as well. But it is also quite difficult to know how fast different technologies will develop, and which technologies that will actually really take a fast development into the financial sector. And if you look at 10 years ago, everybody was talking about blockchain and DLT. But it's not until now that we really see stable coins and tokenization coming into practice. So it's actually one of the parts that I think collaboration and information sharing is important, is to see how our technology is really being used, and when do we see developments that we might have to monitor. And it might start in one jurisdiction, but we know that this technology is global and it will spread quite quickly. And if you look at different technologies, if you mentioned, for example, if you have quantum computing and AI, both of these technologies are quite early in development, and there's a long journey ahead of us. If you take quantum computing, it's not ready for implementation today. But just the possibility that you will be able to crack the encryption that we have for our data and our systems today means that we really need to start thinking about this today and quantum proofing the data that we have in our system. And this is something that is collaboration not just between central banks and financial institutions. It's of course something that leads to collaboration in all types of different authorities and institutions in society. So I think that's an important part. But if you look at AI, it's even a bit trickier, because it can be used in such a broad range of activities. And at a Swedish central bank, we've started a project where we try to work and utilize the power of data better. And of course, AI is a central part of that. But our journey has just started, and as we heard from the previous panel, it's a part of changing the mindset in the organization, but also having standards, regulation, policies, etc. But above all, also have this idea that there's clearly a strong risk that we will be left behind in this development, because at central bank we are usually quite risk averse. So this is going to be something new, and it might change the way that you work, actually. And coming to the risk of AI, I think we heard about AI not having self-awareness, and it's true. It's a highly complex technology. It's a bit of a black box, and it's true that we do not know the exact inner working and reasoning of some of these large language models. But the models themselves also they don't know the right from the wrong. They would just give us the most probable answer if we ask a question. And when we have really complex tasks and we move into technologies that involve the financial sector, it's clear that we may easily make mistakes. We may have trained the model on skewed data. We might have not tested it properly. We might not have a human in the loop. And the human in the loop might struggle. I think we definitely need AI to monitor AI. It's not going to be enough with a human monitoring this kind of technology. But as long as we move into putting this into decision-making process, I think one interesting example is also from Anthropic, that has the AI Claude that we saw recently, that you have a recent study showing that large language models that were assigned to help a company might actually resort to malicious behavior, such as insider trading or blackmailing or even industrial espionage, as they have actually moving forward. And we've seen the cyber attacks, we've seen the fraud and the deep fakes that actually involve persons in our own organizations sometimes. So all of these risks. But I don't want it to sound too alarmistic, because I'm not. And if you looked at the poster session outside here, we have several examples where this technology exactly can be used to monitor the risk that we're seeing forward. And I think that's really important. And I also think that we do have in the financial sector a framework of risk controls, of monitoring that will help us. But finally then, as you said, we live in a really interconnected world, and the risks and the models that are being used do not know the borders that we have for our jurisdictions, so we clearly need corporations. We will have spillover effect if we don't have at least a base level of regulation, best practices, and expectations. But finally, then, I want to point out that, of course, we're living in a different environment also politically than we were 10 years ago. We have a lot more geopolitical tensions. We can see that there's competition between financial centers, and here actual regulation, supervision, and even mandates of authorities could be something that is utilized in this competition. But I think that this is an area where we need to look at even though we have these circumstances, I think that if we do not cooperate, I think these risks will actually spill over across our borders. So I'll come back.
Thank you very much, Aino. Let me turn to Andrew. Given your leadership and your experience in innovation, how do you view the increased use of AI in particular, but also other technologies today in finance? Where do you see the major efficiency gains, the major potential, the greatest potential for good, for efficiency, but where do you also see the major risks associated with them?
Well, sure, and thank you so much for having me. It's a pleasure to be back in Basel and see so many familiar faces. I should say that I'm probably speaking here as a practitioner, not as a policymaker or a supervisor. Quite frankly, I'm used to being on the other side, being supervised, and so have a perspective from an infrastructure operations and technology perspective to the conversation. The way I think about new technologies is actually there's nothing inherently risky or even necessarily efficient about technologies per se. There's many examples from the past where technology has in fact saved financial innovations from crumbling under their own weight of inefficient manual processing. If you think about check clearing in the 70s, or even credit card network authorizations in the 70s, and how technology really vastly improved those processes. RTGS systems in the 80s on the domestic settlement side, CLS in the 90s in terms of FX settlements. You go on and on. In the card space, a chip and PIN have effectively eliminated fraud at the point of sale. So technology can be a massive enabler over time, but of course there are, in the wrong hands, risks associated as well. So endless number of examples in that department, but e-commerce online, for example, comes to mind in terms of card not present fraud being a bit of a cesspool for fraud. Notwithstanding, the internet's been a tremendous boost for e-commerce and commerce in general. When we think about AI now, again, as a practitioner and as an operator of systems, I'm seeing some truly fascinating things happening in and around mostly the fraud detection, prevention, and response piece. In the past, fraud engines would be largely written or operating around kind of prescribed rules, if this, then that type of prioritized rules that if you use an ATM card 14 times in the same place, then you trigger some sort of alert. Now those tools are really migrating towards trained models that can really do a much better job of early detection and ultimately prevention of malicious actors in a network. So that's happening for sure. And one really interesting use case I saw recently was an operator at scale training that model, but then kind of putting it in a black box and offering it to the participants in the ecosystem such that they could run it within their infrastructures. So you're getting now the benefit of a model that has at least notionally network level capabilities of detecting fraud patterns, but it's actually running inside a bank's data center and finding new instances and events, that they would not have been able to find previously. So that was a kind of a cutting edge idea, because it really kind of goes at the heart of data protection. Most participants can't see the whole network. So if you can give them a tool that gives them that type of capability, that's tremendously interesting from my perspective. Lots of stuff in the AI operations space to just make systems more resilient and secure ultimately, which is to say detecting network outage types of events and operational incidences early and kind of jumping on them much faster. So, but like as many other speakers have already highlighted, it's a double-edged sword, AI specifically, that, in the right hands, I think there's a lot of potential and a lot of power. It's very early days. In the wrong hands, of course, frauds and scams and deep fakes and a whole bunch of negative outcomes are certainly possible and already happening. But I think we have to step back, take the good with the bad, and certainly do our best as operators and practitioners to take advantage of these opportunities. So I'll stop there.
Thank you very much, Andrew. José Luis, as CEO of PagoNxt and board member of IBOS Association, formerly a board member of SWIFT, you have a good vantage point on the intersection of global payments, innovation, regulatory change, and cross-border collaboration. How do you see the role of the industry and of public-private partnerships in shaping global standards as these technologies become more embedded? So from an industry perspective, where do you see the most urgent needs for cross-border collaboration in this area?
Thank you so much, Gaston. Thanks again for the invitation to this BIS summit. I'm very happy to be here. So, as you said, I think all of us that are now in the payments industry have to be lucky, right? Because we are experiencing probably one of the best moments in this industry. I remember time ago when this was tagged as kind of a boring industry. Today we can say anything about payments, but not boring at all, right? So we need to, day by day, things are changing, new innovations are coming, and we need to be, as Aino was saying, probably this is going to be the slowest day in our lives, right? So, as you said, at Santander we are well positioned, as you know, in Europe and in the Americas, and we have the luck to be involved in many of the initiatives that are happening around these two big regions, right? And they're very, very different. So what we have seen is that there are specifically two trends that are shaping how the payments world is evolving, right? On the one side is instant payments. I think in the last 10 years, close to 100 new instant payment schemes have been developed in the world, which is amazing and very different, right? In some cases, they have been led by the industry, by the banks, or even by fintechs. But in some other cases, for instance, the case of Brazil, I think this is important to be brought here because normally Latin America is not well represented in this type of forums, right? But Brazil and the launch of PIX have been one of the biggest examples of success examples of initiative that has been driven by the regulator and that has overtaken cards volumes in 4 years, right? So today, Brazilians can pay instantly with a huge number of payments options without having to use cards. And this has significantly improved the financial inclusion of Brazilians into the financial system, right? So instant payments in general, I can put the example of PIX, but here in Europe we have Wero, we have Bizum in Spain, and Biway in Portugal, Blink in Poland. So there are many, many initiatives that are pushing the frontier of instant payments, right? On the other side, the second big trend that we are seeing, like everyone, is what we call new forms of money or tokenized money, right? And here the proliferation of initiatives around tokenized deposits, around stable coins, central bank digital currencies are shaping how money moves, but even beyond that, right? It's not how money moves, but what money is, right? Which is quite interesting. So these two initiatives are happening, and many people and companies are working on them. But there's one thing that we see is that many of these initiatives are quite domestic, right? And that link, that cross-border link, sometimes is quite difficult just to get. So the role of cross-border collaboration and interoperability is absolutely critical. Here, the industry, the regulators need to work together in order to try to converge and bring some of the standards to be developed globally, right? So if you take a look at what is happening in the industry, we can, in a way, and this is a very simplistic statement, but we can put together in 3 different groups the different initiatives that we are seeing in the industry. On the one side, you have industry initiatives that are pushing to have instant payments and new forms of money. You have things like the Global Layer 1 consortium by big banks, the regulated Layer 1 by European banks. You have the Canton Network. So many initiatives that are trying to build these cooperative new systems. I'm sorry. You have as well, within the industry initiatives, fintechs that are developing new stablecoins and blockchain technologies. For instance, you have Circle that has recently announced, it was like before the summer, the Circle Payments Network that wants to rival in a way what we are today collectively doing in SWIFT, specifically for individuals, okay, for retail payments. And you have the announcement of Stripe some days ago that they want to build a blockchain network that is specific for payments. So they feel that the current Ethereum, Solana, or the Layer 1, Layer 2 networks are not sufficient enough to be competitive for payments, and they're going to build a blockchain infrastructure that is specific for payments. So here you have a block of industry initiatives that is quite interesting to follow. On the other side, you see the private-public partnerships with central banks, and even fintechs, right? And here you have uncountable initiatives from Finality, the Agora project that is well known here in this house. You have the Regulated Liability Network. Obviously, you have the different central bank digital currency programs that aim to bring new solutions for not only for retail clients, but as well for wholesale banks with projects like Appia, Pontes, etc. So here there is a very clear example of public-private partnerships that are building on new infrastructure and how money is going to be moved globally now. And the third one, which is quite interesting, is we can call it cooperative, which is the work that SWIFT has done in the past and is doing as well now in order to put together banks, central banks, and fintechs. Okay, so SWIFT for a long time has been trying to build a bridge between the old legacy correspondent banking infrastructure and the new technologies, new blockchains, etc. When I was at the board, and here we have Thierry, we did some proof of concepts in trying to link the old infrastructure, the legacy infrastructure, don't call it old, with the new things happening in the market. Okay, and SWIFT has a very interesting role to play here. So again, industry initiatives are happening, private-public partnerships are happening as well, and cooperative initiatives are happening. This is quite good, right? So we have many initiatives that this is fundamentally good, but this poses several challenges, right? In my view, the challenges that we have are basically 3. On one side is interoperability and standards. Okay, so first, we are seeing this in many places. When it comes to instant payments, we are seeing this when we are trying to connect all the different local instant schemes in Europe. You know that there are specifically 2 big initiatives. One is Wero, covering Central Europe, and the other one is Europa, which is a Spanish, Portuguese, Italian initiative. We are all serving well our domestic clients with instant payments, right? But when it comes to building the bridge to make payments from Spain to Portugal, Spain to Italy, France to Germany, etc., then interoperability is a must, okay? Because P2P is fine, the biggest volume is local, but there are many people living at the borders, right, between Portugal and Spain, between Switzerland, Germany, France. Those people cannot be changing from payment scheme depending on which part of the border they are. So building here an interoperability scheme to connect not only the borders, but all the different schemes is absolutely key. So probably you read a couple of weeks ago the announcement of Wero and Europa Alliance, where we are going to be building that bridge, that interoperability scheme, in order not only to make peer-to-peer payments, but P2M, both physical and e-commerce, which completely will create the first truly pan-European system from a client point of view. So that's quite important. In the case of stable coins, tokenized deposits, even more so, right? So at the end, you read the news, you see every bank is launching their tokens, their tokenized deposits. Every bank is thinking of issuing their stable coin. Circle is having their stable coin, Tether, Paxos. Even IT companies want to launch their stable coins. We need to make them interoperable. Otherwise, we're going to be creating a little bit of spaghetti in a way that is going to be quite difficult to interconnect, right? The second important point, in my view, is settlement, right? I think we have progressed significantly as an industry when it comes to messaging, greeting, etc. So now in Europe and in many other places, we can make a payment from France to Germany using SEPA Credit Instant, and that's fine, right? But I think we need to progress faster in putting messaging, greeting, and settlement together, right? So it's great that we can allow our clients to make payments on Saturday, but we shouldn't be waiting until Monday to do the settlement with the central banks, etc. So there's innovation or progress that we need to make when it comes to settlement. And finally, this is obvious, I think trust, security, and inclusion is the third key element in all these innovations, right? So I think we don't have to convince anyone today that all these new payment systems need to bring, by design, AML, sanction screening, transaction monitoring, cybersecurity, etc. So I think we don't have to discuss about that. Everybody buys that. But financial inclusion, again, is very important. We need to make these payment systems ready to operate and ready to be used by everyone, not only big corporates, not only big banks. We need to provide people that is not included, let's say, in the traditional banking system, or even small businesses that have difficulty to access the banking environment to use these systems, these new payment schemes that are going to be providing a lot of value going on, right? So again, in my view, instant payments is one of the key things that we are seeing in the market. We need to build the bridges between the different payment schemes in order to make truly global systems that can be operated by not the big ones, but the small ones. We have 175 million clients in Santander, in places like Brazil, Uruguay, Argentina, the US, UK, Spain, and we know how difficult it is to move money for these people. And exactly the same thing with stable coins, new forms of moving money. We need fungibility and interoperability between these systems. And one thing more, we need to create the bridges between the legacy infrastructure, instant payments, and the new forms of moving money, because otherwise we're going to be creating completely two different worlds to operate.
Thank you very much. You covered a lot of ground and pointed to key areas for collaboration, cross-border collaboration, both in among the kind of established traditional players like central banks and involving initiatives from the private sector. And maybe I can turn to you. I know you have been deeply involved in many forms of collaboration among the Nordic countries. There is close collaboration on these and other areas. Perhaps you can draw some lessons from those experiences that could be applied more broadly at a global scale, perhaps.
Well, I think there are a lot of things that we need to collaborate on, and the Nordics has been generally an area where we've been close together. Our economies are intertwined, so it makes it natural to collaborate across borders. The central banks have quite close ties. We meet regularly, etc. So collaboration has been quite useful, and also in the payments area and central banking. I would say now, though, that the trend is that I see also globally is that you sort of move into more regional cooperation. So of course now our cooperation is moving also into the the ECB, and we're all in different paces moving into the target systems, and seeing an increased need to collaborate on a bit larger scale when you face these new technologies and you're going to implement experiments that are quite costly and that has to be. So I think for smaller central banks, that's probably a way that you need these sort of larger areas also of cooperation. But I would like to, I mean, from the first panel, we also heard that I think it's really important for central banks to stay within their mandate. So, of course, the new technologies, you could start collaborating about all types of things. But I think it's important, especially in days when independence is discussed, we need to focus on our mandate. And we are going to face different regulation. I mean, I talked about geopolitics and competition between centers, but I think really this point that José Luís made about the spaghetti, that's definitely not where we want to end up. So I think looking at our mandate and looking at existing collaborative structures, I think we need to sort of see collaboration as different circles. So we might collaborate a bit closer with our own industry, the Nordics, then we go to the EU, but we really need to make sure that these systems can speak to each other, because I think the expectation of the public is that they want to make payments instantly, globally, and they want it soon. So that technology is going to be developed somehow, and I think if we want to manage the risk and manage spillover effects, we need to sort of be part of this process. And I also think there are a lot of things that we can collaborate on that are within our mandates. It could be standards and this public-private discussions that are taking place. I myself take part of the committee CPMI, and of course that's a big part of the discussion. But I also think this innovation hub projects where you can sort of discuss technology and have experiments that go across borders and share, that can be really useful. But I mean, staying within our mandates, but we must accept that there is a role of creating this connection, not to end up in a spaghetti landscape, even if we end up in a little bit different solutions when it comes to public-private sort of use of different money. So.
Thank you. Andrew, you have experience working on a regional cooperation in the context of Nexus. Could you perhaps share some experiences from that and lessons learned that could be applied more broadly?
Yeah, happy to. And of course, you know, I think the theme of collaboration, that's what the Innovation Hub is really all about. And having had the privilege of setting up the Singapore Center a few years ago, really the focus was not just regional relationships, but in fact kind of leveraging the power of that network globally that the Innovation Hub is able to bring together. The Nexus project really does touch on a lot of the points that were mentioned in terms of, you know, instant payments at the core, recognizing that this proliferation of instant payments is indeed a global phenomenon. Some central banks have it squarely within their mandate, some don't, but broadly we see this, you know, succeeding where the central banks are at least probably pushing the policy agenda forward. They may not be operating the system, but they're I think forward-leaning in terms of that approach. But now the million-dollar question is, how do we bridge these networks? How do we create, you know, more value out of that significant investment on a domestic basis? And so the Nexus blueprint was one that emerged out of the Innovation Hub that, again, open and transparently, you know, built it on ISO 20022 standards from top to bottom. So we're not reinventing the wheel at all. Publishing and refining this model on the technical side, on the rules side, because every payment scheme is governed not just by technical standards, but by a coherent rule book that has clear obligations and, you know, liabilities and dispute resolution mechanisms for all the participants. That has to be in place. So trying to attack it from both angles and refine this model over successive years. And now I'm, you know, in the position of taking that idea and trying to actually realize it in you know, going from theory to practice. And so certainly with an Asian skew right now, we're working with India, Malaysia, Singapore, Thailand, and the Philippines to sort of create this vision, tying together 5 very advanced instant payment markets, such that cross-border capabilities would be indeed possible. And we aim to go live by 2027. So that's, you know, from start to finish, we're talking at least 6 years of work to get to kind of the starting line, and a lot of contributors, and we'll see how it goes. We're going to, obviously continue to be transparent in terms of what we're doing. We're going to continue to talk to many other jurisdictions in terms of expanding the breadth of the network, the depth of the network in terms of bringing on more participants, and maybe over time, additional use cases. QR codes are in particular well used, certainly in Southeast Asia, and I think increasingly around the world as an alternative for card rails. And so we're keenly exploring those areas as well. So yeah, lots more to come, but I think it's a great example of collaboration and certainly innovation coming out of this shop.
Thank you, Andrew. José Luis, you touched upon both the efforts by many to modernize their payment systems, and at the same time the developments in the private sector. Everybody is now talking about stable coins. You alluded to that. We at the BIS, we have been thinking about this as well. We have in particularly highlighted that tokenization, in particular when you think about the trilogy of tokenized central bank money, tokenized deposits, and tokenized government bonds, that could form a basis for a more modern financial system. So in that broad context, where do you see the use cases for stable coins vis-a-vis other developments?
This is, again, quite interesting, right? Because sometimes we tend to put the focus on how tokenized deposits or stable coins can help banks moving money more easily, more rapidly, etc. But looking inwards, right? Looking at how this can improve banks' liquidity position, reduce risks, etc. Right? But we tend to forget use cases. What our clients are seeing in all these new technologies, right? Probably here, nobody in Europe will buy a euro stablecoin in order to protect their wages from the volatility of the euro, right? It's ridiculous. But what happens if you live in Brazil, or if you live in Mexico, or if you live in Argentina? So in all these places, the volatility of the currencies are big, right? So for an Argentinian or for a Brazilian getting their wages, and 10 days later having lost part of value because of the volatility of the currency is not an option anymore. And there are options because they can easily go to an exchange, they can go to a Coinbase or to whatever, they can exchange their pesos or their reais or whatever by USDCs and have their money in a different place that is fully secured. They're protecting their wages. And what is happening now is that they can use these USDCs to pay, right? Before it was a form of storing value, which is one of the key elements that define money, but now they can make payments with that. So can you imagine what is the impact on this to not only banks or to the financial system in the countries, but to central banks and the capacity that they have to influence on monetary policy? If suddenly their clients don't want to use their pesos, their reals anymore, and they're going to be paying with USDCs, USDTs, you name it, right? So this is a trend, again, that probably from a European-centric view, we don't see it. If you live in the United States and your life is there, you're not going to be buying USDCs unless you are trading cryptos. But for a lot of people in this planet that are subject to it, this is a clear option that they have today, and that can completely change how financial industry is being managed today, right? So to me, this is a huge use case that we are obviously at Santander, because we have a huge position in the Americas, we are tackling, okay, because we are seeing these flows on a day-to-day basis increasing. And not only consumers, exactly the same for small companies that sell online. Why asking your customers to pay in pesos or to pay in reals? You can ask them to pay in USDCs, USDTs, whatever stablecoin, and you're going to be protecting the value of your sales. You don't need huge hedges with the treasury desks of banks that in most of the cases we don't offer these products to small companies because normally we're talking about small volumes, and they have an option that is quite cheap and they can pay with that, right? So this is, again, we don't see it so often from here, but believe me, this is happening. Sometimes we use stablecoin as a kind of an esoteric concept, but this is being used as a real payment method today and a real form of store of value from a lot of people in the world. And this is going to be increasing as we speak.
Thank you. And as you mentioned, this of course creates challenges for monetary sovereignty in these countries. Andrew, what's your perspective on use cases?
Yeah, it's obviously the topic du jour. Again, I think I take your point in terms of emerging market volatility, certain use cases. Online gambling is another big one for stablecoins, I guess. So there's different use cases emerging. But personally, I think that there's turning everything into a bearer instrument is quite problematic. When I talk to merchants, they don't want a fire hose of small transactions coming into a wallet. They actually want to work with an acquirer, and they want a daily settlement and a reconciliation report because it's a completely untenable thing for a small merchant to, manage their accounts that way. So they're used to a certain way of operating, and there's a logic to it. There's many other payments use cases that logically also make sense. Bill payments, salary payments on ACH rails or otherwise. So I think payments are a massive, massive market, and I'm sure there's room for many, many different methods of payment, whether it's ACH, instant payments, or eventually stable coins. And I think they all find their niche somehow. But then when I kind of think about the back end, and I think several speakers have brought it up today as well, there's something about having this massive universe of private issuers that sort of harken back to kind of the private banknote era of the 1800s, and part of me just kind of has this sneaking suspicion we're recreating the wheel actually over and over again. There's going to be need for clearing amongst these so-called non-fungible but stable fiat coins of the same currency. There's going to be discounts, there's going to be clearing, and you're just kind of going right back to where we started in many, many ways, which is just a necessity. That's what you need if you're going to have that environment. And so the complexity of the payment landscape is increasing every day, and I think that will certainly continue. Yeah.
Thank you. Any thoughts on the topic?
Well, on that topic, I would say, it clearly raises a lot of questions, and monetary sovereignty might be one of them. But I think here, you need regulation, and you need in different jurisdictions to sort of think about what can happen. And in terms of financial stability risk, I guess we really need to think about the cross-border flows that you could see, especially perhaps not in ordinary situation, but if you see runs on certain areas, or you see movement, because of course the backing asset will be the central assets of our financial systems, such as government bonds and treasuries and things like that. So I think there's a clear need for regulation, and I certainly agree that the whole point of having a central bank money is this access to risk-free backed assets. I think that's clearly something that I don't think will be replaced. But in terms of collaboration, this is one area where I think the main part is going to be regulation. But then I think it also involves that you might end up in a little bit different solution in different countries. And then I come back to this issue of making sure that you can connect different forms of payment and making sure that they can speak to each other from different areas. But as a final word, I just want to come back to that this shows that you, as a central bank, we need to go back, as the words of the previous panels, we need to keep track on these technologies and be part of the development if we're going to take care of the risk. Because, of course, if central banks don't evolve and we do not sort of keep our offering in line what's needed for tokenization and etc., then private alternatives are going to take over.
Thank you very much. Well, you basically summarized the essence of our discussion, so you made my job easy. I think we saw a unanimous consent in the sense that there is lots of need and urgency for collaboration, ranging across payments, interoperability, cross-border flows, AI, new challenges emerging potentially from quantum computing and cyber risk. And so the life of regulators, central bankers, supervisors is not going to be easier, and that of the private sector either. So interesting times ahead, and I hope we're all up for the challenge. Thank you very much.